In this 2-minute trading tip, we're going to be talking about the MOC imbalance figures. What are they and how should you use them in your trading? So first, let's define an MOC order, a market on close order. These are orders to be executed at the close or just after the close of the RTH session. These types of orders are generally used by longer time frame participants who want to ensure that their order is executed for that day at a price as close to the closing price as possible. Many swing traders and investors employ a strategy that tracks the closing price, so executing at the close is sometimes a point of emphasis. All MOC orders must be received at the New York Stock Exchange by 3:50 p.m. Eastern Time. The New York Stock Exchange also prohibits the cancellation or reduction of size of any MOC order after 3:45 p.m. Eastern. So what's the MOC imbalance figure? The MOC imbalance is an aggregation of the dollar amount for all of the market on close buy and sell orders across all stocks on the New York Stock Exchange. It can be an imperfect indicator for a risk on or risk off sentiment as we head into the close. It's important to note, because it represents the entire New York Stock Exchange, the imbalance number is going to include numerous stocks that are not included in the S&P 500, the NASDAQ, the Russell 2000, etc. So if you're trading the indices, you have to consider that the imbalance figure may not be perfectly representative of the underlying assets of that index. So what are the opportunities here? Like many things in trading, the greater opportunities tend to occur in scenarios where reality has greatly deviated from expectations. So prior to the 3:50 Eastern cutoff time, early MOC imbalances are announced, and these are not the finalized figures. Sometimes there's major discrepancies between the early figures and the final MOC imbalance, which could result in a brief jolt in price action near the close. Before making any trade decisions using the MOC imbalance figures, it's important to track this number for a while and get a feel for it to understand what's relatively normal or abnormal for the figures. So for example, if there's an early MOC imbalance of 300 million to the sell side, and at 3:50 Eastern, the MOC number comes out as 900 million to the buy side, it's unlikely for this number to really impact the price action in the markets at all. Conversely, if the early MOC imbalance was 2.4 billion to the buy side, and the final imbalance number comes out as 6.4 billion to the sell side, then you may see some resultant price action due to the major discrepancy. This will also be highly dependent on the pre-existing context of the current day's session. If we're trending, if we're consolidating, if the market's putting in new highs going into the close, if the market is close to breaking the low of day going into the close. Overall, the MOC imbalance is something to track, but probably not something to build a rigid trading plan around. You won't be able to say, if the MOC number is X, I'm going to take trade Y. It's simply something to put in your toolkit to help to build context around trading decisions. If you've enjoyed this 2-minute trading tip, don't forget to hit the like button and subscribe to our channel for more tips, trader interviews, and webinars.